take a look at the inflation. August inflation has burst the psychological 7% mark, rising for the 6th month straight, setting the stage for monetary policy action. According to the Kenya National Bureau of Statistics, inflation hit 8.36% in August, up from 7.67% a month earlier. But this latest spike force Central Bank of Kenya into policy action. Adelaide Changole has more.
Rising food prices have raised Kenya's inflation rate to its highest level since June 2012. The country's inflation rate jumped from 7.67% in July to 8.36% in August, a level last seen in June 2012 when inflation was a high of 10.05%. The rise was driven by a jump in the food and non-alcoholic beverages index, which rose 1.75% from July, while the transport index was up 0.73%. On month-on-month terms, inflation rose 0.9%, which Razia Khan, head of research for Africa at Standard Chartered Bank, said was unusual for August, given that inflation pressures tend to be more seasonally benign. The inflation rate is significantly higher than CBK's preferred medium-term range of 2.5 to 7.5% and the analyst's forecast of 7.89%. Razia says she expects the year-on-year inflation in September to decelerate significantly on the back of a large base effect related to the passage of the VAT Act last year. But this reduction will likely only be temporary, with inflation then resuming its upward trend. But while the drivers of inflation are mostly related to poor rains and the pressure of food prices, others like forex volatility, strong credit growth trends, and a gradual recovery in economic performance risk worsening the situation. As such, she says there is room for a modest rise in the policy rate by the end of the year. CBK has maintained the CBR at 8.5% since May last year. But with inflation breaching 8%, the committee will be expected to consider policy action at its meeting scheduled for Wednesday. However, other analysts say the possibility of a rate adjustment is small, given the limited liquidity currently prevalent in the market, the weakening shilling that touched a 32-month low last week, and the government desire to see lending rates drop below 10% by the end of the year. Adelaide Changole, KTN Business.